Good morning, good morning, good morning. Kalimera, everyone. How are you? How you doing, guys? Kalimera. Today is the 23rd of July. And it's a very, very hot day. It's like 34 degrees right now as we speak. And it's only 8:45 almost. So how are you guys? I hope you're all doing fine. I hope you're all doing well. Let me put some music here to keep the vibes. And let's dive inside the charts and see what is going on. I'll go through the messages. I like to see the messages. Again, music from the region of the South and Eastern Mediterranean. It's something different. And also, it's a kind of music that we don't get banned. Right, okay, here we go. Let's have a look. Stelios says to us, good morning. Kalimera KDFCD. Today is a good day. That's right. Today, it's a good day. We must focus to do the best from today. Forget about tomorrow. Tomorrow is another day to come. It's not here yet. Yesterday is gone. We need to focus, all of us, including myself, we need to focus to create moments and memories, good memories. Okay, because this is the only thing that we hold. It's apart from the history. Okay, and we just need to create good memories. Okay, so for us, in order to have good memories, at least to our best of our ability, is to make sure that every day we're doing something towards the goodness in order for you to create a good memory. Okay, now life is life, and life can throw us many obstacles on the way. Trying to remain cool, trying to remain under control. Always remember to stay in control. Okay, and that is down to you. No one else can and shouldn't, I should say. No one else should make you out of control. Okay, you control yourself. You are in control of you, and nobody else is controlling you. Therefore, you are in control, and that should not let anyone else ruin it. Okay, they can say whatever they want. They can throw you any problems on your way. Make sure that you stay cool and don't let them ruin, or let's say don't let them trigger your emotions. Okay, same thing with the trading. We don't want to let the market triggering our emotions. We want to be in control. We cannot control the market, but we can control our actions. When we're gonna go long, when we're gonna go short, when we're gonna close the trade, when we're gonna cancel the trade, everything. Right. Good morning, everyone. Good morning, Bassman. Good morning, Mrs. Bradley. Bobby. How's the weather in SA? I hope it's not going to be terrible yet. You are in the winter time. Easy. Good morning, sir. Bassman is here with us. Stelio is here with us. Butter Bubbly is here. Johnny John is here. Good morning, sir. And Mute Chili is here. Good morning, good morning. Good morning, everyone. Welcome. Right, okay. I don't want to delay any further. Let's have a look a little bit closer with Bitcoin, what it's doing. Look how tricky again, once again. That focus area, right? We were playing around with this focus area. So it pushed all the way up. Okay, remember that wasn't Monday, if I recall, that our target was to go to this G level, right? And once it went above the 50%, it did not hold above 50%. It came back to our entry point, our focus point, and look at that, boom, it went to our original level, right? And if someone did not take any action, it went back all the way to that little focus area, right? So for someone, so to say, had 3 chances, 3 good trades, and that, don't feel bad if you didn't catch any of it. That's not a problem, okay? Because it has to do with timing. And speaking of which, that was early in the morning on Tuesday, 9:30. There it is. The next time was a couple hours later, okay? So 11 o'clock. And then the next one, again, in the afternoon, 5 o'clock, just a little bit later, just a little bit after the US Open. So you have 3 chances on the same day. Okay? So this is timing. Obviously, it is not going to be convenient, right? That you're going to catch all 3 of them. But at least I hope you catch one of them. Because that happened 9 o'clock, couple hours later, this happened. And then in the afternoon, this happened. Okay? Nevertheless, our target was TP1 and TP2, right? It came all the way back, riding upwards. You can see now this time, in respecting the 50%, it broke all the way up to our next 50%, close to our resistance, came back, retest this, and is targeting again the resistance. So you have equal highs, double top, and since then, it's coming down. It cannot withhold that G level, comes back, lose that, and now it's targeting the next 50%. So if we all together will pay attention to the G levels, we should be doing okay. Okay, we should be doing okay. And according to your timing, you're trying to figure out the direction. Okay, on Tuesday, okay, our primary target was to go higher. Okay. Now, was it here on the market update? Was it a bit later after the market update? Was it way later, in the US Open? Right? Look at that. 1 level, 2 levels, 3 levels. Okay? If you catch that from the US Open, so to say, let's say outside from your focus area, okay, and just under the 50%, that is a 1.91% on the Bitcoin. Imagine doing that by 20, that is going to be a 40% almost for you. Okay, if you do more than 20, 25x, right, try not to go more than 30, 35. If we're talking about intraday. Okay, we're talking about you're going to stay here just for one session. So yeah, let's hope that you catch some of it, not all of it. Okay, I know it is not wise to come the day after and say, oh, look at that, he gave you almost 2% move. No, I'm trying to be reasonable, and I'm trying to be realistic as possible. Okay, right. Okay, so Bitcoin, it moved all the way up to 120. We have a major resistance. That's why it's marked. Okay, and you see that we trigger it twice. Okay, that was the first time. Okay, and that's the second time. And you see that we cannot hold that level, and it's coming down. So now we're going towards the end of the Asia. We've got another couple hours for all Asia sessions to close down, to end for the day. So we need to be cautious around what's going to happen with 118 and what's going to happen with 117. Okay, so today, with our timing, we can see that we're doing a correction. Okay, now because the market moved quite rapidly, like one way to the upside, quite strong. Okay, got multiple times that it found support, and since then it's going upwards. Okay, so it moved all the way from 116 all the way up to 120, which is $4,000 a price change. Okay, now very strong move to the upside. Now you can expect to have a correction. If you zoom out a little bit, okay, and go a little bit at a higher time frame, like 12 hours, to make it a bit compact, okay? I don't want to confuse you, but what do you see? We see, technically, okay, that we are in a range, okay? That is a big range, okay? There you have it. So we inside that range, technically. So we have all these lows. We see, we're holding very strong support here. So roughly you can see that we're holding 117, right? And then we're trying to break out. So we have this high, this is lower high, and obviously this is a lower high. Okay, so technically we have a descending triangle. Okay, or other people would say, oh, we trying to form a bull flag. It's going to be a bull flag when and if the price is going to break and continue to the upside. If it's going to break this support and go down, it's going to be a bear flag. Okay, but anyway, people on the textbook says if the price is coming from below, comes up, it gets squashed, there's a high possibility that it's continue to the upside. That's why majority of the people, they're calling this a bull flag. Okay, me personally, I don't rush myself to give names, right? I want evidence rather than prediction. I want facts. So there we go, right? So this is kind of a range that we're looking ourselves that we got into. Okay, now if you wish to put it down into the G levels for you to focus on the G levels, you can do. There it is. Okay, it's up to you how you want to see it, but I just wanted to give you the bigger picture. Do not panic. Okay, let's go down to 90 minutes. Okay, and we were expecting that it's going to be like a range on the 90-minute. This is your order block, right? What is an order block? An order block is when the timing is the indication of the timing when an order took place into the opposite direction. Okay, so what are you targeting? You're targeting, it's going down, right? That is going down. So you're targeting the opposite candle as a color. So that is purple, it's going down. You want to target let's say the candle, the body of the candle that is opposite, that is going up, which is a bullish. Okay, so that is a bearish direction, bearish indication, and you just need to target the body, okay, which is a bullish, and that is your order block. Time wise, why we mark this time wise is the time that they took action to the opposite direction. So you see it was pushing to the upside, right? Correction, it was pushing, everything was going on the way up, right? And then suddenly someone shifted, which means large orders. And it's not in one order, it's a sum of orders. So you have a sum of large orders that were strong enough to stop the movement to the upside and reverse it and give us a good strong correction. Okay, so it is not a random event. So that's why we mark it. And that's why we know that if you have a very strong move to any direction, okay, what we keep in mind, so to say, that around 60% or 70%, okay, let's say 60 to 70, so it's fine. I don't mind about the numbers. So around 60 or 70% of the total orders have been executed correctly, and we have a remaining between 30 to 40% remaining orders, which means because the orders start getting executed by the exchanges, right, the price start moving away from the exact price order, which means some of the orders did not have the time to execute it because price moved away from that specific price. So if you, let's say, the price was rising towards $2 and you place an order to sell at $2, but you are selling loads, big sizes, the price, the market will react immediately, okay, or let's say in a short time, which means, okay, that the price is moving towards the downside. But the exchange has a huge list of orders that has to be executed at $2. So when the price is dropping, it's going $1.99, $1.98. Therefore, the conditions cannot meet anymore. So the remaining orders at $2 specifically, exactly $2, cannot be executed because the price moved away from it. So you have leftovers. And we keep in mind, okay, I say in the CIA, we say in the CIA, so we need to keep in mind that around 30 to 40%, okay, it's a leftover. So when the price is approaching again on the same area, the unexecuted orders from this area now finally are getting executed. And usually it's been observed that if I measure these, the primary move, the initial, the start of the order block all the way when it stopped and found support, if I measure this, is a 3.3. And as a general thumb rule, okay, I usually say that I target half of the primary move. So if the primary move was 3.3, I then target, let's say, 1.7 or 1.6. So around 1.7 is around half of the 3.3, right? So it's been observed that 80%, so to say, 80%, 8 out of 10 times, okay, the second correction when the leftovers are going to be triggered, okay, this is your number one, this is your primary, this is your second, okay, usually, but 80% does not exceed 50% of the primary move, okay? So I measure it, and then I measure it again, I target 50%, and I usually say it does not exceed more than 50%. Now, that has some exceptions, which we don't know when that is happening. So you don't know when it's going to be 80 and when it's going to be 20 against you, right? That is how it's going to be determined. You're going to find out later after that is passing. Then you understand that here you had not only the unexecuted orders, you had a top up, which means new orders came in the same area on the top, stacked with the unexecuted remaining orders from the first time. So it has extra weight and it's getting pushed. Okay, this is something that we can't really see real time with real data. I'm sure there are data, but it's not available to us. Okay, there are data. You can kind of see a little bit with, it's not in the prediction, but you can use a little bit the delta volume to see exactly what is going on, how heavy are the orders. So let me bring the delta volume here. So you're trying to understand how heavy is the negative volume. Okay, you don't compare it with this one. Okay, you cannot compare the bars and say, oh, but you can see here that you have these lovely strong negative bars, okay, and that created the down push. Obviously, at the same time, the other market conditions, contributed, and also you have no buying pressure, just little wicks. Wicks is buying pressure, but it cannot stall. It cannot stall the down move, and you see that more and more selling pressure was coming inside, okay, and that's why you had all these down push. Here it's the same thing. You have loads of 1, 2, 3, 4, 5 negative or bearish candles. If you want to see negative delta, okay, that is pushing the price down, and you're trying to see if the rule of 50% of the primary move is going to be respected. Anyway, I got my G levels, and I say roughly my 50% is here, 118. Let's hope that in this area, not a lot of people or heavy orders did not come in to stack up with the remaining orders. Okay, and you have extra stack. So we hope that we don't have heavy stack to push the price even further down. Okay, and also you can see here the stochastic RSI is flat. It's not cross, it's not telling you that it's over, it's telling you that the RSI cannot go any further lower. It reached zero. Okay, so the first line is zero, it can stay flat. The more it stays flat, the lower the price will go. RSI past the 50 mark is on 46, it's going lower, and we can see the ASO here that the negative is increasing. Haven't crossed yet, but it's increasing. The blue is dropping, which is telling you that this is the local high for this area here, right? So this region here is telling you this is the highest point for the time being. The price is retracing, and we just want to see maybe a turn of the blue. If not, we may see the purple rising, and if the purple rising, it's telling you that the price will go even further lower. Now, a lot of people that they're trying to study ASO, they're taking approach only on the crossings, right? This is what they're focusing. To me, this is a little bit too late. Okay, you can use as a confirmation, but it's too late. That's why I always look for the peaks. Okay, always I'm looking for the peaks. Let me full zoom in here. My point of interest is always the peaks, when something's going up and then when it's turning. It's going up, turning, going up, turning. I'm always looking for the turnarounds from the top. If it's blue and it's topping up, right? If it's blue and it's topping, it's telling you cannot go any further higher. If you see the purple topping up and then turning around, it's telling you that the price cannot go any further lower, and it's turning around. Okay, so whoever is on the top turning around is losing. So this is a negative, a bearish. The price goes down, losing steam. It's telling you it's turning around. Okay, so with a combination of those 3-4 guys here, let's put delta as well in the equation. If you have all these 4 guys here together, you have a little bit more understanding what is going on with the market. Now, obviously, you cannot predict with these guys. It's just telling you, because remember, RSI, stochastic RSI, and ASO, all of them are lagging indicators, which means they're relying on the data, past data, to do some formula calculations, and then they're going to come back to you, giving you a value on the screen. So it's not real time. The only thing that is real time is the price action and a little bit of the delta. Just a little bit, the delta is here to tell you what is happening now. But it is not final. Okay, the last bar, it is not final. As long as that clock is ticking, it's got another 24 minutes for that to print. Let me maximize that a little bit so we can observe. So now, the price is here. So I'm going to mark it. So let's see where the bar is going to be in the next 24 minutes. So I'm going to mark it. I'm going to leave it here, right? And then let's come back in 24 minutes or later today and see where that volume is going to be. So as the price is progressing, so does the volume, right? So that candle can change and that bar will change as well. As the RSIs, okay, and the ASOs, they need time to do the calculations because they're going backwards, okay? They're going backwards, like 13 periods. How do you know that? Sorry, 14, okay? RSI length, 14. So what does it tell you? It tells you that it calculates 14 candles, right? So this is number 1, this is number 2, this is number 3, 4, 5. It goes all the way back 14 candles. Ignore the time frame. It's telling you the length. So if you are on the 90-minute time frame, so that's the stochastic RSI that follows the 90-minute time frame, it has to go back 14 90-minute candles to give you the calculation, right? The same thing with the RSI. Okay, the length is 14, right? So all of them, they're looking backwards. So every time you give in, every time the price action is printing a new candle, the RSI is stepping one step forward, but still looks 14 candles behind, right? So it's kind of like trailing data. It's trailing behind the price action. So overall, it can give you an understanding what is going on. It's a confirmation when you have a cross up or a cross down. It's a confirmation that the price action is moving, and that will give a little bit confidence to the traders that are using RSIs. Now, stochastic RSI, when it's best to use, is when the price is in range. Okay, it's super accurate when the price is in range. Okay, so it knows where is the bottom, and it understands where about is the top. Okay, and you see that every time that the price is coming around these areas, what do you get? You get tops. Okay, what do you have here? Top. Okay, you have some other tops as well because it's reading exhaustion and changing the direction, but this is not the range. Okay, this is the range here. So RSI, it's very, very accurate on the range, and the higher the time frame, the better it is. Okay, the higher the time frame, the better it is because it has less noise. Okay, so everyone that is following a swing type of strategy, like a swing type time frames and approach, they trade less. They don't trade every day. They may trade, once every 2 weeks or something. Okay, they're waiting for the cross-ups to happen on the 12 hours or even the daily. Okay, if someone is following the daily time frame, right now no one is interested to buy. Everyone's interested to short. And look at that, daily cross down, RSI is going down, stochastic RSI is going down, and ASO is going down. And look, the delta, that is, let me make sure that we can fit. You can see that the delta is negative. Not very strong negative, but it's negative. Okay, it's negative. So no one is interested on a daily time frame, which is really, really swing traders and higher time frame. Moving from swing to long-term traders, not investors. Investors, they go even higher. They're going to weekly, 15 days, monthly. Monthly, it's an investor. It's like a well. Okay, daily, on the daily time frame, is someone that wants to move away from, it's on the band from swing trader towards long-term trader. Okay, so you have a bunch of people that they're not interested because they're looking on the daily. The swing traders, they want to grab an opportunity, but unfortunately it hit resistance and it's cutting off itself a little bit short. It's coming down, but they don't lose faith because they're trying to enter as low as possible around 115, 116. Okay, so far the price is 118, so they are still positive. They reach 120. If they are still in, they're still positive. We don't have yet a correction, right? You don't have a cross down. You have a slowdown, yes, but not a cross down. So these guys on the 12 hours, they say, yeah, okay, let's give it a bit more time. Don't panic. Okay? The intraday guys like us, we're looking on the 90-minute and lower. We can go all the way down to 15. Now, 15 is a super small time frame. The RSI is going to be super noisy. It's going to go up and down like a maniac. Okay? Right, so there it is. This is the 15 minutes. Okay? And you can see, that you have overall a downtrend. You need to see a little bit more data. You need to go a little bit further back, the RSIs on a smaller time frame to understand what is going on. Okay? And you see that kind of squeezing, right? It's going down. But I usually take notice of the RSIs on a higher time frame. So that's why I start every day from 12 hours, move down to 90, then move down to 15, and then I can, mess around with 5 minutes when I'm ready to trade. Okay. Right, let's go back to 19. Let's have a look a little bit. Here we go. We didn't need to wait for more than 24 minutes. And look at that. Okay, this is the mark that we put on the 90-minute time frame, and you see that the volume is moved even further down. Right? So it's progressing. As the price is going lower, the candle changed and the bar changed. Okay? Right. Just a little bit of explanation about how to see a little bit, the RSIs. To understand why we mark this resistance and why we're expecting a move. And you can see now that the price already moved. So if you have this spherical understanding of the markets, understanding the G levels, your key resistance and support areas, A. Number 2, you understand to identify on a little bit higher time frame the ranges. Go back to 12 hours, 90 minutes, 6 hours, and see, do I see a range here? Okay, let's mark the top and the bottom, and let's see what's going, what it's doing. So technically, Bitcoin is an accumulation state. That's why Ethereum is running. That's why the alts are following, because it's, Bitcoin is in that state that is in doing accumulation. Obviously, when it's reaching the bottom of the range and everything is normal, orders, bots, or, whales, traders, they're going to go long. Okay? They're going to use this accumulation time not to waste time. So they don't waste time. Institutions every day, when they're logging on the broker's account, what are they doing? They're trying to find something that is normal, calm accumulation, and they're waiting for them to enter at the very low on the bottom of the range and get out on the top of the range to make the most of the day. That's what the banks do. Okay, this is what the fund managers do. They're trying to accumulate and play around when the market is still not trending. Because to be honest, the big money, the big bucks is going to happen when the market is trading, when it's moving. When it's accumulating, the retailers, majority of the time, they're going to do this wrong. Okay, but the fund managers, the people that they have brokers account, that every day they go down to Liverpool Street, or they go down to the city, downtown city, the original hardcore finance city. It's called the City of London, and it's an area called City. Okay, and believe it or not, that is a different country. It's a different state. Okay, within London, you have an area that's a different state. Okay, it's called City. This is all the financial institution operating there, okay, especially in currency. So I worked in there when I was young, and when I was studying in England, and I was working for a security company doing supervising. I was a supervisor for security guards, and I was roving around the contracts to see, if every guard is doing well, supposed to be, doing the patrols. Make sure that, his uniform is nice and clean and ironed. We had to look at appearance a lot because you are in the city, right? You are inside, among, let's say, with strong financial people. You need to look 120%, okay? So I spent some time inside the city, and I'm telling you that even, you have this feeling, this energy that is way different from the rest of the country, the rest of the city. I'm telling you, very heavily guarded. Okay, checkpoints by the police, and it's a special division. Okay, it's not the metropolitan police. People that they know about London, they know that inside the city it is not metropolitan police. Okay, it's a city police, different area, different state. It's a state within a country. Okay. Anyway, so all these people, what they're going to do every day? They're trying to find opportunities every day. So they're trying to ride the waves. Okay. So if they mark a range, they have the alarms, the alerts, and say when the price is going to reach here, there's a high possibility that it's going to bounce, because it's keep on bouncing for some time now. Okay. Look at that. We bounce here on the very early days of July 11th. We bounced here on the 15th. Now we're bouncing in a little bit higher in these regions we bounce on the 18th, on the 21st, and on the 22nd. So these guys, okay, they have, let's say, a mark area, something like this. I'm going to do something like this here. And that's an area, roughly, okay, and I'm going to call this buy zone. Okay, this is what they do. This is the buy zone. Let me do this a bit bigger. Right, so they have an area. Let me make it a bit stronger so you can see it. Right, so this is the buy zone. Right, and up here, where is the resistance? All right, that is selling zone. So what do? They put alerts, and every day they're trying to find the direction, the timing. Okay, so every time they go into the buy zone, oh, let me put that as a target because I don't have a selling zone, so I can put that as a target. Okay, so there you have it. So every time the price is coming down here, they buy, they go up here, which is the target, and they sell. And then they can immediately start shorting and coming back, close the trade, buy again, and then trying to go all the way up again. Right? And you had multiple chances for other people to do the same thing and follow. So you have order number 1, number 2, number 3, same target. And here, all these 3 guys exited. Right? So you have trader A, trader B, trader C, but they have common target. And that's why now you see a strong rejection. Okay? So once you have this understanding that how the market is moving, what is the, what possibly the fund managers, all the institutions, the big companies are doing. Okay? Majority of the time we do know by experience that around 70% or 80%, 80 is a bit rush, but let's say around 80% of the time you are waiting. Retailers are waiting to catch a trend. That's why the retailers are the best customers and also the worst traders. Very good customers, they're creating liquidity, but very bad traders. Okay? But we use that. Okay, there's nothing we can do. I mean, we try here, we're trying to educate the CIA, whoever is inside the CIA, we're trying to educate them. Okay, but for the rest of the people that they haven't found yet CIA, they haven't discovered the CIA, they're going to keep on making mistakes until they found a mentor, and hopefully a good mentor that is not going to scam and take their money, right, and teach them how to do trading correctly. And the first thing that you need to fix is your mindset. What expectations do I have from the market? That's the first thing that you need to put down. What do I expect before I get involved in Forex, before I get involved in crypto, before I get involved in stocks? What are my expectations? What is the purpose? Why am I here? I'm here to make money. No, that's not an answer. You have to be more specific. Okay? We have to be more specific. Why I'm here? I'm here to increase my capital, whatever that is, by 20% in a year. Okay, cool. Now you're talking. People say 20% a year? Yep. 20% per year. That is your starting point for someone that has zero knowledge. How much the bank is giving you in a year when you have your money on your current account? Have you checked? When was the last time you checked your current account credit, so to say, award, if I can call it award, right? How much they're giving you for you having the money inside the bank on a current account? Zero. How much percent interest you make on the savings account? 0.05. How much do you pay in case you go under on your account? Let's say you're going overdraft. Do you know? It's around 6%, 5%, 6%. So by you having money in the bank, you don't make any money in a year. By owning money, you had one bad situation and you run short of income and you have more outcome, you have more expenses. When the balance is going to go very low or negative, you start paying 5%. It's ridiculous. Okay? But this is how the banks make money out of you. So a bank or any big, large company that they have, they have, so to say, a business, an operation, they target, in some point onwards, I'll explain that, they target that they want to see the business grow over the year around 20%, which is quite strong percentage. Okay. Now, if you start a new company on your own, okay, let me draw this very quickly. If you start a company, you start from here, from zero, you open a company, and then all of a sudden, you got money coming in, okay? So you go parabolic because you start from zero and you went up to, let's say, 1 million, okay? I'll give you big numbers here. You're a millionaire now because you've been working on a business, and because you started from zero, obviously, it's not going to be easy for you to get to a million, but let's say you have a turnover of 1 million a year later, okay? So you see yourself a year later, what have you done with this business? And let's say that you have 1 million turnover, okay? Now that is going to be parabolic because you started from zero. Once you reach 1 million, so to say, after 2 years, 3 years, it is not easy for you to move from 1 million and continue to 2 million. So once you reach that peak of the parabolic state of the very beginning of your trade, of your business, then every year you're trying to increase it a little bit, okay? And it's going to be very, very smooth for years to come, okay? So every year that step is like kind of 20%, 10%, 5%, 7%. Only the very beginning can be very strong. It's like the altcoins. When something is fresh minted, okay, developed, you see it go bananas, parabolic, right? Now, if you're good and you are legit, you're going to go to a flat line. And this is where a lot of people get discouraged. But there is no way that a business, there are exceptions, but there's no way as a rule of thumb, okay? There's no way that you're going to keep going, right? You're going to have a big, nice move to the upside. At the very beginning, you're going to have a good spike. You get all excited. You're going to give a bit slack to yourself because you're going to be a millionaire, and then you get slack, and then you get a correction. And you're like, oh shit, what happened? Oh, I think I lost my target because I was focusing that I made a lot of money, and I let things a little bit more smooth and let it cool down. And this is what happened. That's the result, a correction. And then you put yourself back to work and you're trying to go up again. But guess what? You're going to go to the same area. Now from here, you're trying to maintain. It's very hard to maintain. People don't understand this. It's very easy for you to go from 0 to 1 million, but it's very difficult for you to maintain that million every year. The first year, the second year, the third year, the fourth year, every year for you to maintain 1 million. It is not easy, right? Forget about increasing. There's no way that you're going to double the first wave, right? There are exceptions, but I'm thinking about, I'm trying to be realistic. So you're going to have a good correction. And if you don't let that correction to sidetrack you completely and lose faith, because otherwise it's going to keep going down. And you say, oh shit, I've lost it. But let's say you have a correction, you pull yourself together and trying to increase. From this point onwards, you cannot expect a 200% increase or 500% increase or 1000% increase. From now on, you're going to target 20%. Which means If you're lucky and you manage to hit that target, which means the next year you're going to be on 1.2 million. It's not too bad. It's a progress. 1.2 million. Well done. Congratulations. But that is extremely hard work. It's harder from this guy here. So when you talk about finance and, finance, fund managers and finance in the big companies, especially that they have some time in the market, they cannot have expectation that every year they're going to do 500%, 100%, etc. They're looking for 10%, 20%. Okay? So, expectations. What do you expect you to achieve from this market at 20%? Okay. Now that is going to be hard. You need to have a good understanding and you need to spend some time because you need to build your experience. And you need to make mistakes to learn. So, the next rule is that you can only going to put money that you afford to lose because I guarantee you at the beginning you're going to lose. Okay? So, it's myself, that I like cars. I like fast cars. So, I decide one day to go to, I'm not going to say Formula 1. Let's say I decided to go to Le Mans, which is one of the greatest racing, which is like it lasts 24 hours. If they're going to put me there, okay, I'll be out in an hour. I'll say, guys, I'm done. I'm knackered. I'm sweating. I lost 3 pounds, 5 pounds. What is this? I can't do it. I can't keep up, right? I'll try to do my best, but the guys run over me 2 laps. I'm like, 1 hour later, I'm 2 laps behind. Why? Because I'm not trained to be a professional driver. So I don't have an expectation with zero experience, with zero training for me to go up and compete with Formula 1 or compete with Formula 3 or compete with Le Mans. There is no way. There is no way. Okay? There is no way. Exceptions, yes, but someone needs to have some background to do so. Okay? They need some background. You can't go with zero knowledge and win. Sometimes there are exceptions, right? You have to be gifted. There are people that are gifted, but I'm not talking about the exceptions. I'm talking about the logic here. So we need time. So please, the second biggest rule before you enter a new sport, so to say, right? Before you get yourself into something, make sure that you're going to risk anything that you can afford to. Is it money? Good. It's about yourself. If you try to go into extreme sports, you have no knowledge. You're risking your life. You're risking your body parts. It's extreme sports, high risk, right? It may give you high adrenaline, but on the other side, you may lose a leg or an arm or your life. So you have to judge a little bit and say, hey, you know what? Okay, I like this extreme sports. I like that my neighbor is doing such things. He's been doing it for some time, so he knows what he's doing. He, slowly, gradually, he built up. One day I would like to do what he's doing, but for now, I have to go back to kindergarten and do my little lessons. Okay, whatever that is. So if I like, driving, okay, let's go to a simulator that you're risking nothing. The only thing that you risk on the simulator is your energy bill, all right, and your time. How many hours you're going to spend on that simulator. Once you get to understanding what is going on, then you go to the local race circuit and go for go-kart, which is something very small. Very, low power engines, and you're trying to make around yourself in the circuit and trying to understand. And then if you're good, then you're going to go down to, you're going to do some races and some tournaments. And then if you're stepping up and really understand what you're doing, and you're good with physics and you're good with your driving and you understand the car, you understand the speed, you understand the cornerings and everything, you master your technique. And then if you're taking the polls, then someone's going to notice you and say, hey, let me get you to Grand Prix 3. And then if you're good, you're going to go to Grand Prix 2. And if you're good, then you're going to go to Grand Prix 1. The same thing with Formula 3, Formula 2, and then Formula 1. You have to go step up a little bit, okay? One by one. You cannot go straight away to Formula 1. You need to put down, as a risk, things that you can afford to do so, okay? So if you go to Formula 1 one day, you're going to die. But if you start doing simulations, and then you're going to do go-karting, and then slowly increase, you're going to build yourself. You understand the rules, and slowly you're going to put yourself to higher speeds, higher G levels, and then you get trained. You understand. You see the limits, and you know where to stop. But with zero knowledge, day one, you go to Formula 1, you have no understanding of the physics, of the G-forces, of the handling of the vehicle, your capabilities, the car's capabilities, the circuit capabilities. You know zero. On the first corner, you're out. And you're done. Okay, that's the fastest way for you to die, is just go on the first turn on Formula 1 and you're out. So, expectations, and then you need to risk what you can afford to lose. So you need to start slow. I'm not going to say demo accounts. Demo accounts are fakes. Okay? Fake account, fake numbers, fake candles, fake orders, fake sizes, fake emotions. And they're manipulating and they're giving you all the good stats that you're doing very well to convince you to go into the real accounts. That's the purpose of the demo account. To trigger people that, hey, you don't need to worry about anything. Use the demo account. We have fake 1 million for you. We've got fake 100,000 for you. Use it. They're trying to attract people that are reckless. Okay? So what they do, they give you big sum amounts. And then why they give you 100,000? Why they don't give you $100? They give you $100,000, $300,000 because 1 or 2 and 3 or 5% increase as a profit is returning you big chunks of money. And then you get hyped up. Oh, look at that. I just made 3,000. I just made 5,000. I just made 10,000. They don't see the percentage. They see the chunk, the big chunk, like $10,000 in 1 hour. Shit. Okay? So they hype you up. They make the numbers look nice and round and big. Obviously, they're going to give you nice charts as well to benefit you, to build you, because their target is to make sure as soon as possible they're going to move you to a real account. And once you put the money in real account, you're done. You're cooked. Have you seen any exchange to give you a training? What is the market? How do you find the key levels? What are the indicators? What can you do? Strategies, conditions, rules. Have you seen any of them giving you a training about this? They don't even, I'm not going to say 100%, but they hardly give you any tutorial of what the tools they have, the buttons, what are they doing, when you should use them. They give you like a PDF style, like a website. You click here and you can understand what the OCO is. What is the OCO? One cancel the others, but yeah, what it is. I have zero knowledge. I don't understand this terminology. What is that? When do you use it? Why you use it? How you use it? Zero. But they're good to give you, easiest access on your mobile phone. Within 5 minutes, you have an account. Demo accounts is shit. This is the truth. Demo accounts is only a tool like leverage. It's exactly the same thing with leverage. Why do they give you leverage? To feed your greed. Okay? That's why they give you big accounts on the demo accounts. They give you huge accounts. Why? Because they want to feed your greed. You see that trading is easy, you can make money easy. And the influencers on the networks like on Instagram and TikTok, This is how I made money. Lambo, villas, lovely boys, lovely girls, bikinis, you name it, everything, clubs, drinking, alcohol, all the reckless lifestyle that you don't have because you are working class. I'm talking about the retailers, right? This is the target audience. What are you doing? You're working 9 to 5. You're miserable. You don't have money. You don't have side hustle. You don't know what's going to happen tomorrow. And they're trying to feed you with a luxury yacht that you can't have. They give you a luxury car that you can't have. They give you a luxury lifestyle that they're going out to the clubbing, they're going to these nice restaurants, they have these nice chicks. Sorry ladies, I'm talking about the boys here, right? That's what the boys want, right? Nice chicks, right? Nice ladies, nice girls, have fun, have more than one girl, go to a yacht with 10 girls, right? They don't give you fishing with your buddies. They don't give you that kind of lifestyle, right? They're talking about Dubai, they're talking about, private jets, all these, lovely, cars and hotels, 5-star hotels, and people serving you, blah, blah, blah. This is 1% of their time. Even the rich people, okay, they probably, do these once, in a year. Rich people are, rich people to stay rich, they need to accumulate and maintain the capital, not spend it on yachts and cars and holidays and, and all these lovely party girls. Because each party girl is going to cost you money, mate. They come to you, okay, because you become a magnet. Imagine yourself right now that you have 10 million in your account, which is nothing, okay, to that kind of society thing. But let's say that people understand that you have 10 million in your account. If you start dressing differently, if you start showing off that you have a Rolex, if you start showing off that you have a Lamborghini or a Phantom, Rolls Royce, whatever, Ferrari, whatever car you like, okay, and then you're showing off that you have a bigger house now, and you start showing off that you're going to buy these kind of attractions, these kind of assets. It's not assets, it's liability, to be honest. Okay, if you own a car, it's not an asset, it's a liability. End of story. No negotiation about this. Your car is a liability. Okay, it's not an asset. Even your own house that you live in, it is not an asset, it's a liability. The only time that your own house is going to be an asset is when you're going to rent it. If you live in it, it's a liability. This is how thin that line is. But anyway, go back to the subject, is that when you have a different lifestyle, you're showing off that you have money, then immediately you are attracting a different kind of people that they're hunting down rich people, if you understand what I mean. You're going to have opportunities, different people, high class scamming. Okay, so you're going to have people say, hey, would you like to upgrade your car? So you have a car dealer that's trying to upgrade your car. Oh, your car is very old, it's 2020, we've got 2025. In a few months we're going to have the model 2026, and we're going to be the first one to have it, and I can guarantee you I can reserve one for you. What's the interest of this guy? To make you look nicer with a newer car? He doesn't care about the newer car, he cares about taking your money. So this guy is a bit higher class because he's not targeting to make a few £100 from you, like $100 or $200. He's trying to look to make like, $100,000 in commission or $200,000 in commission by selling you a better new version of vehicle. You have a vehicle. The purpose of the vehicle is to take you from A to B, for God's sake. But I'm not asking you to go with a bus on the metro station, with a subway. Okay, you can have your own car. Why do you have your own private car? Because you have the freedom to go whenever you want, in any direction you want, in any route, anytime, on your own will. That's why you have the private car. Otherwise, you're going to hire cars. You're going to hire like people doing for you. That's why the taxi. So why do you have a private car? For the freedom of movement. Okay, good. Once you understand this, why do you need a Lamborghini? You can do this with a Toyota. It's the same thing. It's a private car. It takes you from A to B. Nothing wrong with a Toyota. It's the other way around. Toyotas are very reliable cars. Very, very cheap to run. Okay? And they last forever. You forget to change the oil and still goes. Right? Buy a BMW and you miss one, let's say you miss one service stop, okay, by accident, you just pass the miles for a little while, you're doomed. You're done. All the light bulbs are going to flash on dashboard. Bing, bing, bing. BMWs are very expensive to run. Why? Because the Germans, they focus to build a very nice car, high performance car, to have a nice class, fast ones, a little bit aggressive, this and that. They have all the goodies inside, but they do expect that the owner is going to be very, very disciplined with the servicing history. Toyota is the other way around. They don't focus so much on the luxury. They do now. They do give like luxury, but it's not a Mercedes, right? When you have a Toyota Mercedes, you can understand the class difference. Okay? But Toyota is a very experienced car maker, manufacturer, right? They are very unforgiving when you miss anything. I know. You tell me. I got like three. I had in my life 2 BMWs and I had 2 Mercedes. Right? Very nice cars. Okay? Nice cars. They ride very nice, especially when you go high in the range. The roads, you know, the how they ride on the street, on the road is unbelievable. Okay, they've done so very good, you know, mechanics and engineering and design, everything. It's beautiful, but you miss one service, you're done. You're done, right? If the BMW dealership is telling you, you know, in the service department, sir, according to your miles, okay, you need to change these, you need to change that, and you go like typical guy, is it broken? No, sir, it's not broken, but it's been recommended. Okay, if it's not broken, don't fix it. Right? 1,000 miles later, boom, you go back to the garage and say, well, they said, well, we did warn you, we did ask you to do this. It was recommended. You didn't take the option. Now you have to pay 3 times the price because you created more damage, and then you have to spend more time in the car in the garage and for them to fix it, plus extra parts, blah 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 blah. They're gonna laugh on you. When the mechanics ask you to do something at the recommendation, I'll tell you from now, do it. And I challenge you. Go to the mechanic and say, hey, I've got 200,000 miles on the clock. What do I need to change? What is recommended? Go chase them. They don't tell you. You know why they don't tell you? The mechanics outside of the dealership, like, you know, your next door mechanic, right? They don't tell you. Majority of them, 80%, 90%. There are good mechanics out there, but they don't. They know for a fact that you decide to move away from the dealership. So you go to the next door mechanic, right? Why? Because they know that you don't want to pay money to the dealership because it's expensive. They're asking to do all of these recommended things, and you're fed up with the expenses. So you decide to go to your local mechanic. So you go down to John and say, hey, John, can you take care of my car? Yes, of course. He knows that you just moved away from the dealership. He knows why. So he's not going to recommend anything. What do you need, sir? I think it's time for me to do the oil change. Okay, no problem. Whatever you say. Boom, goes in, change the oil. Off you go. It's done, finished. How much is it going to cost me? 1/3. That was fast and that was cheap. I'll see you next time. Okay, bye-bye. Off you go. If you don't take care of your car, the mechanic's not going to do anything. The mechanic there is going to be, oh, you came for repair. What happened? What's the problem? Oh, I know. I think you need these. Then they're trying to change these, and it's not that. You have the same problem. Okay, we're going to do a troubleshoot, all right? So we have to do these little steps. So we have to go one by one until we find it. Why? Well, we don't have the diagnostics. You see, the original diagnostics that is in the dealership are costing thousands of pounds for me to get it, and I don't have it. I have an imitation. I have a aftermarket diagnostic that goes certain levels down. It cannot go deep down. So I can't find exact the problem. I just can guess. And by guessing, guess what? You're paying more than the dealership. I'm telling you about from experience. Right. And then you go back to the dealership and they're laughing at you. Oh, welcome back. What's the problem? Yeah, 2 years down the line, I think I painted a second car. But I still have the original car, but I paid so much money that cost me a second car. All right, okay, let me go down the list. And they see all the stupid mistakes that the mechanic's done. Oh, this is aftermarket, this is not the right way. So they're going to change everything that he's done, plus all the recommended things that they want to do for your mileage. So you're going to end up paying again on that dealership, even more money. And you say, hey, you know what? Don't do anything. Just paint it blue and throw it down the sea so no one can see it. Just paint it blue and throw it down the sea. I don't want... That's the problem of what happens with the cars. So that, it is not, technically not your problem. You know what was the problem? That no one bothered from any manufacturer to tell you or give you an instruction how to properly use a car. They give you a manual, which is like 300 pages. I'll ask you here now, how many of us are here? 5 people, 6 people? How many of you have been going down that manual? No one did. Because since you got the keys, you knew exactly where to put the keys, you knew exactly how to put the first gear, and you knew exactly where the accelerator is, put the handbrake down, and off you go. And you don't need to worry about anything until you get the warning on the dashboard. Bing! And you're like, oh shit. What's that? Is that true? Am I lying? Am I wrong? What do you think? So, why? Because no one bothered to come down to us from the manufacturers, from Toyota, and say, hello, sir. I know it is not convenient to come to every customer to do so, but at least, create a fucking DVD and give it to him. And say, hey, please, this is a 1 hour video. Please watch it. Just for you to get and understand what is going on with that bloody fucking car you just bought. What you need to do. It's a liability. It's running. It's rolling on the road. It needs things. So give an education to people. People need education. Proper education. Not a book with 300 pages. Since you see that bloody book that's it's like 3 kilos. It's so heavy, right? It's a heavy book, 3 kilos. Who's going to go through that? No one does. They just bought a car. They spend 20 grand, 30 grand, 50 grand. They bought a new car. They don't want to read it. They want to drive it. So, in the end of the day, it's about knowledge. You have no knowledge about the car. Alright? Now, it's down to us, to be honest. It's down to us for us to be, let's say, a little bit more reliable to ourselves, right? And dive in. That's okay. I went to the teacher to learn driving, but okay, now I just bought a new car. It's mine. It's my property, my liability. Let's see, what is needed. A lot of people on the road, okay, they don't know how to use indicators. Believe it or not. They're turning left, right whenever they want, right? Never mind about the servicing. So anyway, we need knowledge. That's the power. We need knowledge about the things that we're going to get involved with. So learn about trading. That's why the CIA is here to make it a little bit easier, okay, how to find key levels. It's very simple. when you have a chart, I'm going to do these with a brush. When you have a chart that's going accumulation, it's going up, it's doing a nice wave, right? It comes down and then it's doing something like this, okay? And then accumulation and then it spike up, then accumulation and then spike up. All you have to do is bring the G levels, right? Mark the top of the wave, mark the bottom of the wave, and then you have it, right? Don't ask me how I managed to get these lines aligned, but there you have it. Okay, you mark the top of the wave, the bottom of the wave, right? Resistance of the 50%, it came down, resistance on the 75, and then it goes. And finally, sometime it's going to break. That's all you have to do. This is what you need to do to break down, okay, key levels. Okay, you need key levels. So you need to put the number 4 here, the template number 4. There you have it, number 4, right? Make it a bit thicker and say, okay, that's my key levels. That's my top, that's my bottom, and that's my 50%. And that's all you have to do, right? Learn to find support and resistance at the key levels. And then we need to learn how to act based on the data that we just draw on the chart. This is the basic stuff that we need to understand. Okay? 3 levels. Mark them down. And now the next step is for us to understand the rules and conditions of engagement. When do we get engaged into a trade? We need to understand the momentum. We need to understand the direction. Then later we're going to understand the resistances. Why do we mark this resistance? Order blocks. Then, you know, a year later, 2 years later, that you've seen the market, the top of the market, the bottom of the market, you experience a bull market, you experience a crash, you experience a bear market, you experience a rug pull. Then you understand the frequencies. They go up, they go down, the waves. Then you understand the key levels. Then you understand support and resistance. Then you understand liquidity. Then you understand imbalance. And then when you put everything together, then you understand indicators. You put everything together and say, okay, I see this, I see this, I see this. I think this is the right time now to go. And then you just decide what kind. Are you going to do a 2-speed trading? You can do. It's a business. Okay, 2-speed trading. I'm going to do something like intraday every day. So I'm going to have 20% of my capital available to do day trading. And then the rest of the 80% is going to go spot, but at the very bottom of the market. And when is the bottom of the market? Go on the monthly. Go on the 45 days and you're going to see when is the bottom of the market. That is when you're going to put 80% down, right? That is your number 1 speed, a low speed, low leverage, 2x, 3x maybe, no more than that, okay? 80% of your capital on a 2x. At the very bottom of the market on the monthly time frame, use the RSI on the monthly. Go at the very bottom and forget about it. Come back a year later or 2 years later when the top of the market is going to be in. And the second speed, you can have the remaining 20%, whatever that amount is, okay? And say, hey, I got 5 grand on speed number 2, which is intraday. And let's make some money until the end of the market for me to grab that 80% that's been sitting there on the monthly basis. You can have 2-speed businesses, and that's all. That's all. Okay? And later on, are you going to be always glued on a PC and do trading? No. After one cycle or second cycle, when you have enough money, you can create another business. Open a restaurant if you like. Open a cafe if you like. Okay? Open a hotel if you like. Do something else from another business, another area. If you like, you know, the hospitality, then you have a hotel. Find a nice destination. Find something cheap that you can buy. Find the right people to run it, because you're not going to do it. Right? It's a business, not a liability. You're not going to be in there running it. You need to have people to run it. You're going to observe. You need to have an understanding how a hotel operates. You need to understand how hospitality is operating. You need to educate yourself. And then you need to find the right people to do it. The first thing you're gonna do, you're gonna put a CEO. All right. So if you open a new business, you need to find someone that's gonna run it. So who are you gonna hire? You're gonna hire someone that he knows what he's doing, because you don't. You don't have yet the education. So what are you gonna do? You're gonna buy a business, and you're gonna say, "Oh, I just bought a business. I just spent $500,000, whatever that is. I've just been random numbers, right? Okay. I'm telling you that. Let's pretend that we're Wells, and you have $500,000. So you spend $500,000, okay, to buy a business. You don't know how to run it, and you just bought it, and you're gonna say to yourself, I need a year or two for me to understand the industry. No, hell no. You say, hey, okay, I have this. Who's gonna run it? Find the CEO. Find the CFO. Who's going to keep the books right? Okay, find the marketing. Who's going to attract more customers? Who's going to do the deals? All inclusive, swimming pools, spas, everything, entertainment, right? And have this business running, and you make more money. You're not going to run it. You are the investor. You're putting money down, and you're going to put other people to run it that they know how to do it. And someone's not giving you the numbers that you want, you're going to hire someone else. Simple. You're not going to waste time and money, because you're paying wages. So, hey, I pay wages, I pay the bills, I pay everyone, I need some return. If the return is not happening, which is the ROI, return on investment, if that's not happening, something's going wrong. We need change. Simple. You're going to oversee the business. You're going to see from number 1 to the number 10, to the last guy, right? Who's running it? From all the way from from the management all the way down to the waiter, okay, or the guy that's going to do parking for the cars. You have to see everyone, because you pay them. But you're going to hire all these people for everyone to do its own bits, for have these running. So it's like an engine. An engine, it has a piston, it has valves, it's got gears, you got oil, you got water, you got this, you got electricity, you got air, you got fuel. Everything all together make the engine run. You are the owner of the car, and you just need to build the right engine with the right components. So you need to have the right people. So your CEO is your fuel. You have to put good fuel in there. Right? The CFO is your oil. Right? The CFO is going to take care of the numbers, right? The finances, the oil. It's not going to let the engine burn and stuff like that. So we need knowledge in the end of the day. Okay? Experience and knowledge. Have good expectations. You don't drive a car that is very cold first thing in the morning, and you rev it into the reds and run out in high speed. Okay? You're going to destroy the car. So you have to warm them up. You have to learn about how to drive. Okay, a lot of sidetracking here. Let's continue very quickly. Right, you see, we're expecting to go down to 118. This is what we're witnessing right now. That's where we are. It's a downtrend. We're losing levels, 1, 2 levels. That was the target. Okay, at the beginning of the live update, we were around here. Okay, you see the structure. Okay. You have to see the structure, bounce, comes up, breaks it. Resistance, continues to the downside. That's your target. Once you reach this target here, you just need to wait and say, if I have a target or a trade open, I'm going to close it. 80%, 70% is up to you. How much you want to close it, 100%. And then you need to observe what it's going to do here. You know that you have 1 hour left for Asia. Okay, and you're going to wait and see what's going to happen. Either it's going to go up or either it's going to continue to go downside. If it goes sideways, it's neutral. It's nothing. Okay, it's like you on the traffic light. Okay, and you have the neutral gear. Are you going anywhere? No, you're inside the car. So you're waiting because it's red. You're waiting for the green light. Okay, so you're waiting for the green light. Either it's going to go up or either it's going to continue to go downside. So you're on the traffic light, or either you continue straight or you're going to turn left or right. Okay, there's no way you're going back. but either it's going to go left, right, or forward. So the same thing here. So when you are going sideways, consolidation, you're on the traffic light, on neutral. Okay, nothing interesting, no progression. You just need to move. Which way? Well, you need to make a focus point. Would you like to make a focus point here like this, down to 5 minutes? Why not? This is your focus area. Let's say that is the last wave. The last wave to the top. That's the last wave to the bottom. Okay, and that is your focus area. Make that focus. I think we made one. It's called focus. There it is, focus area. And that is your focus, and then you wait on the 5 minute and say, hey, you know what? I'm gonna go short when and if you're gonna break and retest outside of the range, or I'm gonna go long once and if you're gonna break the range, retest the range, respect the range, and get out. You want to have the 50% inside, same thing. There you have it. Let's save us as a focus. We need the 50% line in there. I don't want it to every time go inside the settings and enable it. There it is. Right, that's your 50%, and say, hey, prove to me that you want to go up. Now, do you want to be early cheeky entry, be a little bit cheeky with your trades? Okay, if you have the expectations, even though that you're in a downtrend, okay, but let's say this is a key level and you have an expectation that the bottom of the range, this is the bottom of the range that we're going to turn around, then you can have a cheeky entry. Are you in the range? Are you in the bottom of the range? No, at the bottom of the range, okay, on this time frame, let me go a bit higher. Okay, so the bottom of the range is down here. Okay, so roughly I'm too far away. Okay, that's the focus area that we're paying attention. So let me remove that, that's gone. So let's say this is the buy zone. So if you wanted to do a cheeky entry, would you do it up there, or would you like to do it down here? Because this is the 50% of the range. Two things can happen, okay, on the 50% of the range. Either it's going to bounce, or either it's going to lose it to come down. So if you want to do a cheeky entry, that will be down here in the buy zone. You're in a downtrend, you're coming down here, you say, hey, you know what, strong rejections here, strong supports, there's a high possibility that we're going to turn around. I may do a cheeky entry. I know that it's in a downtrend, but I'm going long because I know that the majority of the time here is getting support. So I want to catch it. That is a different story. But right now, this is the top. Let's say this is the top of the range. This is the bottom of the range. And this is the 50% of the range. Okay? If you wanted to do cheeky entry long on the downtrend, you have to do it down here. Now, there's a good possibility. There's a good possibility. I'm not going to say high. There's kind of good possibility that's going to bounce here and turn around. Okay? And be, part of the correction. Very, very strong bullish reaction on the 50%. And then it's going to go up and try to attack this high. Get inside deeper into that range and try to attack 120 again. 121. It's 120.8. So almost 121. Or are we going to lose this and go down one level and inside the buy zone for you to do the cheeky entry long? So two things can happen. Either we're going to bounce, or either we're going to continue to the downside. Don't try to do a cheeky entry early, okay? Just monitor it. Go smaller time frame, go down to 5 minutes. Okay? And say, hey, this is my range. I'm going to wait and see what's going to happen. Nice and simple. There it is. Okay? You see that little focus area, you have a nice, lovely rejection if you see it, if you pull it to the left. So you have a support, resistance. So far, it's not looking bullish. Okay? So there's a high chance that it's going to get out and continue to the downside. Wait to get out, see rejection, either on the box or either the 50%, and then continue to the downside. Okay? And then wait what the US is going to do. Around the US time, or any major market opening, right? EU, US, Asia. This is the three sessions that we look. Around these opening times, be careful. Okay? If you see something that you open, let's say you trade a couple hours before an opening, right? And it's going down and a little bit pausing, take the profits, because the opening of a new session, especially like in America, it can do a lot of things. There's a lot of volatility going on in there. Two volatile areas for crypto is US and Asia. Okay? That's when you see, around that time you see things move. So if you see that it's losing that 50% going lower, go for short. It's already in a downtrend. Okay? You can see that. We are downtrend. Okay? So the price is under the trend line. What you expect? Resistance. Drop it. Okay? Nice and simple. Nice and simple. So lose that, go short. If it holds sideways, mark the, let me put the focus area here. Mark the focus area and say, hey, my conditions are 2. Please break out, retest, and I'll continue for long. Okay? So let me do a nice green symbol here. So from the 50%, I want to get out. I don't know how high, but when I'm going to do a correction, I want to stay outside of the box. Okay, so that is your green condition, and this is your red condition. Get out, respect, get rejected on the G level or the box, right? And continue to the downside. That is your plan B. And I'm going to mark this as red. And that is it. Okay, mark the conditions, wait, and see what's going to happen. Okay, nice and easy. You can do the same thing with Ethereum. What do you see with Ethereum? It's trying to approach 3,871, go down, did not find support, unfortunately, went all the way down, find support on 3,622, push up, got rejected now, $100 lower, okay, 3,746, got rejected, right, and it's dropping down. So, what are you going to do? Mark the 50%. Just so you have a visual, where is them at 50% and what the price is doing on that 50%. And you're like, oh, I see something common here. I got this rejection, I got this rejection, also a strong rejection here. So this is a flipping point. Are we losing it? It looks like it. Okay, so you can go short. I see these lovely wicks that is trying to push, but go down to 15 minutes. If you cannot claim that 50%, let me do that pink because everyone remembers that the pink, it's 50%. So there you have it. I'll make it nice and thin. So if you cannot claim that 50%, let me do this thing. I'm sure it's too small for you. So if you cannot claim this, it's going down. It's already in a downtrend. Okay, it's rejecting. Nice and simple. It's rejecting. It's coming down. You cannot find support on the 50%. We under the 50%. There's a good chance that it's going to go down. There is a chance to claim, especially when we're going to change the sessions. But right now we are in the middle. We started with the EU session. We're going towards the close of Asia. And now the question is, are they going to take these lows now or later? Are we going to claim 50%? Conditions, right? This is the 50-minute and say, hey, this is my area. Break this. Find support, I'm going long. You break this, you're going down, short. Simple as that. So far, you're under the 50% on the Ethereum. Okay? So maybe today is a short day. Maybe. Until the US. When the US is going to come around, you're going to do reassessment. Different timing. Okay? Maybe you're going to get different directions. Others, we claimed 0.12 and we're trying to stay above it. That's nice. Okay? So alts, trying to stand. Okay, are we going to really stand on 12 and go all the way up to 18? Let's see. Okay, so far it's doing so well. VIX, what is the fear? We're still inside the green, on the higher band of the green, but we're still inside the green. We are not in the lower band of the green. Okay, we are in the higher band of the green, but the lower it goes, less fear in the market. Okay, it's not that the grid fear index, it's a little bit more robust. Okay, but this is generic on all the markets. Let's have a look at a little bit of other tokens like XRP. XRP is doing fantastic. Let me go down to smaller time frames. Let's get rid of a bit more of the space. Here we go. We mentioned yesterday that that is dropping, was coming down. Okay, so it pushed a little bit up, but it's giving you a lower high and it's coming down again. So it looks like it's going to lose the $3.47. Okay, so you had these high abandoned wicks. Look what happened. It reached that area, it got pushed down. It's trying to push up, but it never reached 359 or 360. It pushed the upside, but it's coming down again. Okay, so yesterday we've seen the fight that is trying to go up a little bit. Look at these huge wicks, right? But it got exhausted on the same area. Okay, it got exhausted on the same area. Deviation, but it come back, same area is coming down. Okay, so now you question yourself, are we going to get more XRP army guys that are trying to push up, or are we going to lose this and come back to these levels? Okay, so far you're losing 347. Okay, you want to wait completely in 45 minutes that the edge is going to be completely 100% shut down? You can do. Do you want to wait for the US? You can do. Okay, but have the conditions go down to 15, right? Mark your focus area. Okay, the top, the bottom, that's what I get now. That's my local data. My timing is now. This is what I see and say this is my focus area. Okay, that's my focus area. What's the conditions? Always simple. Anything above the 50, respect and continue to the upside. Okay, that's going to be your green guy. And the other way around is getting out, respecting, and continue to the downside. That is going to be your bearish scenario. Did it go out? Yes. Did it respect the range? No. It's going towards the 50%. There is a possibility that it's going to get rejected 50% and get out again. There is a possibility. Why? Because we're already in a downtrend. There is some momentum to the down anyway. So there is a good chance that it's going to get rejected on the 50 and get out again towards the downside. If not, if it claims the 50%, then the story is going to change. It's shifting. All right, so there is a chance if it's going to claim the 50, get out, break out, and then you're looking for condition number 1, plan A. So plan A or plan B. Or if you want on the downtrend to call the continuation as plan A and plan B if it's going to reverse. It's down to you. It's up to you. Whatever makes more sense to you. All right. That's XRP for you guys. Okay. Nice and simple. Look where the imbalance is. Look where the support is. You have common grounds here that every time touching that ground, push to the upside, push to the upside, push to the upside. So if it comes down, let's see how far will it go. Look to the left, trying to find, are we in a range? Kind of. Okay. This is your buy zone. Down here is your buy zone. Wrapping around these guys here. So that's your buy zone. Okay. Your resistance is up here, which is your selling. So I'm going to call this resistance. Resistance. Okay. Now this is where you buy, this is where you sell. Now, kind of in the middle, just a bit lower than the middle, and continue to the downside. So your buy zone is a bit lower. Unless, okay, if XRP is claiming this level and trying to push to the upside. And you say, okay, we're claiming levels. And under that condition that we're claiming levels, I'm going long. But for the time being, it's a downtrend, shorting, we lost the G level. It doesn't look like it's going to claim that G level, so I'm going to open a short on XRP until the US open, because in the United States, new market opening, you never know what the institution is going to do. All right? They may do something bizarre. Maybe they're going to do something silly, stupid, good, whatever. Okay? You don't know the actions of the market, so you're going to be a bit cautious on the opening. Okay? And that's it. Let's have a look at Solana. Here's Solana. What is Solana doing? We passed under the 200 mark, 199 since yesterday. So we're still under 199. Okay. So Tuesday, let me see in the morning. So Tuesday in the morning, we were down here, around down here. So in general, it's going upwards. Okay, so since yesterday morning it was pushing. Look at that, it's trying to lose that G level. It claimed it gave you a W formation, claimed the level, went up to the trend line, got rejected, go up to that trend line, got rejected, goes up to that trend line or G level, it's get rejected. Okay, it's having a hard time to give you a clear strong uptrend. However, it does give you trends. Look at that, trend, stronger trend, downtrend. It's giving you opportunities. Okay, and you just go level by level from this level to this level. Now you see that it's losing that level. Okay, next one. So Solana today, there's a possibility that it's going to continue to the downside. You just need to watch out this level. Okay, especially on the way down, when the price is when the price is going down. Let me do this as a demonstration. When the price is going down, you have a downtrend. I want you to pay attention on the V shapes. How I'm going to do the V shapes. I want you to monitor the V shapes that they look like this. Okay. So when you're coming down, I want you to be careful the peaks. So when the price is going to approach a peak, there is a possibility that once a resistance, when the price is going to come back, it's going to bounce and find it as support. So on the way down, you look to the left, you're not looking for that V shape because it's the other way around. Okay, that V shape you're going to watch when the price action is from below and approaching. So you're going to see that support and resistance. All right, it's like a mirror. Okay, it's like an invisible line and say, hey, that was a rejection point on my way up. I expect that is a possibility that we could get rejected. Okay, the same way that a lot of people see, oh, I have a support, there is a possibility that we're going to get fine support. Yes, but that is the price coming from upwards towards downwards. Okay, from higher to lower. The major V shapes that I want you to pay attention is not so much this guy here, rather than this guy here. Okay, and this guy here, and this guy here. These V shapes, and say, hey, what do I see here? V shape to the upside, V shape. Closer to my price action. I'm not looking for that V shape. I'm not looking at that V shape. I'm not looking at that V shape because I'm too far away. Okay, and when the price is coming from lower to higher, right, I want you to pay attention to these V shapes. Right, once a price reacted as support, there is a good possibility that the price is gonna bounce away. Okay, what's that? Oh, that the upgrade paste. Okay, sorry, my mistake. That's a live link for the market update. So there you have it. Right. So, what kind of V shapes on my way down? I'm looking for the V shapes that are getting, let's say, rejected. Okay, so you can go to 15 minutes and look for the V shapes like those. I mean, let me do the mark. So you're looking for these kind of V shapes, these strong V shapes on the way down. Okay, you have some V shape here, some V shape here, and you're trying to mark them and see what's going on. Okay, V shape here, V shape here. Okay, rejection. Okay, I see that. I have to be careful in this areas, and it happens to be very close to my G level, right? So if you continue, look for the V shapes. Okay, especially swing high, swing lows, technically. Okay, that's what you're looking for, swing high, swing lows. So if you're coming down, you're looking for the swing highs. If you're going up, you're looking for the swing lows to bounce. All right, that's another little trick. So that next time when the price is going to come, let's say that the price continues and then it's going to bounce, you need to be careful with this guy. Okay, because that was support, so you're going to do the opposite, resistance. Okay, next time that the price is going to go up. So Solana for the time being, retracing, we under the trend line. We're treating that trend line as resistance. Every time we're getting close and touching that trend line, we're going down. Overall, we are in an uptrend, but this is a correction phase. Tesla. It's looking good on the 15 minutes. Look at that. Moving up for 299, 317, now 334. Right. Are we going to go back to 351? Maybe, perhaps. A lot of people are paying attention to Tesla due to the fact that Tesla is investing a lot of money in AI. Okay, we're not talking about AI project. We're talking about a company that is investing in AI for its own products. Google. Let me zoom out a little bit and understand why this giant red box here. That was the area that we'll pay attention. Okay, that was our swing high. That was our swing low. And since then, we're going upwards. Okay, we mark these G levels. That's the 50%, technically the 50%. That G level is the 50% of that box. And you can see rejection, accumulation on and claiming. And now we're targeting the top of the G level. So on the 90 minutes, you can see that Google is doing fine. Right? What else? What else, guys? This is the higher long term. We all know about the long term. Long term, what do we have on the 7 days? A bit slow down, but not a cross down yet. Okay? We may get in a couple of days another cross down. We'll see. Okay? That cheetah back now. I mean, we don't have new gaps. We still have this gap here. We don't have a new gap yet. We'll see how that goes. Ethereum is trying to turn around and claim. Okay, let's see. We are towards the end of Asia. Let's see how the EU is going to roll out for the rest of the day. And then, you see, it's trying to get out, claim, goes up, claims at 50%. Oh, that's very good. That's very bullish. That's good on you, Bitcoin. Okay, what are you going to do next, though? This is a 5-minute time frame. Okay, so we slow down between these two guys. What are we going to do? Right, you need to see a breakout retest. That's the conditions. Okay. Right. I think we've said so much today. We've been almost 2 hours here with all these lovely stories. Okay. So the main thing is always, make sure that you have an understanding of where you're getting involved, what your expectations, the targets, and the progress. You need to understand all these and go slow. And if you have consistency of profits, it doesn't matter if you have 10 trades and you have 7 losses. I'm going to use that example again, which is a true life example. 10 trades. So you have T10 and you have W's as 3 and L's as 7. As long your risk reward ratio, triple R's, is above 1 to 3, risk to reward, you're risking 1 to gain 3. As long you maintain these as a bare minimum, even after 7 losses, you're gonna be in profit after 10 trades. 7 losses, 3 wins, and your capital is gonna be up. Believe it or not, it is true. As long your risk to reward ratio stays on all these 10 trades above 1 to 3. Okay, so 7 losses and 3 wins can take out all the losses plus give you profit. So even if you're a lousy trader having 7 losses out of 10, you can still be profitable. I expect that you're going to have, by now, I'm going to say, I'm not expecting you to have 3 wins. I'll expect for you to have, out of 10 trades, more than 5 wins. I expect that you're going to have maybe 6 to 7 wins. For you to have 3 losses, it's fine, because you cannot predict the market. The market's going to do whatever it wants to do. You have conditions, you have rules, and you play by the rules. The market doesn't play by the rules, you do. So the market can do whatever it wants. If the market goes in one direction in the way we want it, and we found a trend, we found a direction, we found a trend, we found momentum, and we continue, we follow that, we're not acting like the salmon, okay, you're going to be good. And I expect for you to have more than 5 wins out of 10. So I expect that your win rate is more than 50%. I would like to see you around 60%, 65%. Okay? You're gonna reverse the trade only when you reach a key level, a buy zone. And then you can have a little bit cheeky entry and say, hey, I think you reached the bottom. This is a major support. Every time you reach that area, it's the time to turn around. I'll buy. I'm not waiting for super confirmation or 4-point system reversal. I have a cheeky entry. And the cheeky entry means you're gonna go 1/3 of the position that you wanted to go, okay, and maybe a little bit lower leverage, because in case it's trying to damage you, go against you, you don't want to lose a lot. Once you get the confirmation, you can increase the leverage and you can increase the positions. Okay, that's it. Nice and simple, nice and lovely. Okay, I'm gonna keep that focus area. We don't need the conditions as a reminder. We know what we're doing. This is the focus area. I'm waiting to break out. Okay, and I'll be waiting to see what the US is gonna do. I'll be away today from the US market, but I'm gonna be on the phone, and if I see something, I'm gonna post it on the Discord. I have to take the family to another city. Right, okay. That's it for today, folks. I hope you had a good time today. We had a good conversation about life. And I'll see you around in Discord, and I'll see you tomorrow's market update. Okay? So take care. Have a lovely one. And always, you know, before you get yourself into something, make sure that you understand what you're doing. You understand what you get into. Make sure that you don't risk more than you can afford to lose on anything, not just money. And have people around you that they have the knowledge to help you out. Okay, so maybe you need a mentor, or maybe you need a CEO, or maybe you need someone that knows what it's doing to keep you on track. That's all it is, right? Don't expect that you need to have. You don't expect yourself to do everything by yourself. You don't need to do that by your own self. Okay, so that's it for me, ladies and gentlemen. I'll see you tomorrow. Every day is a good day. Every day. Take care.